There's several. I think everybody's got blind spots in one way or another, and they're error prone. But certainly one of them is that they are old, and they're not used to new things. I mean, they're not the type of people who embrace new technologies and different ways of doing things. They look at the tried and true and tested, and they also don't want to take a lot of risk.
Bill Miller is an investing legend who famously beat the S&P 500 for 15 years in a row. Bill, in a recent interview with William Green, the chairman and chief investment officer of Miller Value Partners, talks about the enticing bargains he sees in today's beaten-down market and reveals the biggest bets in his personal investment portfolio. He also explains why he's so bullish on Bitcoin, which he began buying at $200, and why he thinks Warren Buffett is wrong to criticize it. Warren Buffett said at the Berkshire Hathaway annual shareholders meeting last month that Bitcoin is not a productive asset and it doesn't produce anything tangible. Despite a shift in public perception about Bitcoin, Buffett still wouldn't buy it. Whether it goes up or down in the next year or 5 or 10 years, I don't know. But the one thing I'm pretty sure of is that it doesn't produce anything, Buffett said. It's got a magic to it, and people have attached magic to lots of things. Watch the video till the end to find out why Bill Miller thinks that Warren Buffett is so wrong about Bitcoin and why he remains so bullish on the king cryptocurrency asset. We want to use this opportunity to appreciate you for watching our videos. Please smash the like button and consider subscribing if you are yet to do so.
Who was the inventor who just died recently who invented that black box? And you flip the switch and the lid came up and a hand came out and it turned the switch back off again and went down to the box. Oh. So basically that's what Bitcoin is. It's a protocol. And effectively, the number of Bitcoins has a certain feature that it basically goes in half. The new supply goes in half every 4 years. And so I think it's what is it, 12 Bitcoins every 10 minutes are created. And that's what, and then all the computers and the miners are solving equations so they can get those Bitcoins, which are given to them if they verify that the protocol is functioning properly, and there's no double counting and stuff like that. So, but that's fixed, and it's 21 million and 2140. That's when the supply will run out. And then for Bitcoin, so who's going to maintain what are the miners going to do that? Well, they're still going to maintain the ledger, and they're going to do that though they get fees for that instead of getting Bitcoin. So it's the same process will be underway unless they go from what's called proof of work to proof of stake. Which I think is a potential risk to Bitcoin right now, but not a big one. So the one that everybody will understand is when, what Buffett says is that Bitcoin is a non-productive asset. He said, I wouldn't give you $25 for all the Bitcoins in the world, but if I buy farmland, that I can grow stuff with it. If I buy a company, it can generate dividends and earnings and cash for me. Bitcoin doesn't do any of that stuff. So he says it's like gold. You can sit there and look at it. It sits in a place in your portfolio, but it's non-productive. And therefore, he can't value it. And I think fair enough. I mean, that if the only thing that you think you can value are productive assets, then no one's making you buy it, right? So ignore it. Now, the other, maybe the more mundane thing for most people would be that, I've used this, I think I might have told you, I used this with my good friend, Chris Davis. And I said to Chris, who's been in every major meeting that I've been in on Bitcoin, going back to when it was $200, and he's never bought it. And his argument is, well, yes, I understand that it could be digital gold. In fact, it probably might be better than gold, but I don't own gold either because it's a non-productive asset. He's got a Buffett view on that. So why would I own Bitcoin? And my first answer to him is, well, the objective of investing is not to own productive assets. The objective is to make money. So the question is, can you make money with this thing? Not does it give you dividends, but if you can make money with it, So what I said to him, I said, but look, here's a better way to think of it, Chris. Like, you're an expert in insurance, right? And he's like, yes. I purport to be. My grandfather was the insurance commissioner of New York, and my father, was a longtime insurance analyst. And I published a newsletter when I was young called the Insurance, Analyst Observer or something like that. And I said, so how do you value an insurance policy? And he said, well, you can evaluate an insurance company really easily. You can look at the exposures. You can look at the capital. You can look at the experience they've had. You can look at the quality of their investment portfolio, on and on. I said, I didn't say an insurance company. I said an insurance policy. And he paused a second. And I said, well, here, let me tell you the way I think about that, and you tell me where I'm wrong. I said, you own insurance, right? You have health insurance, you have car insurance, you have homeowners insurance, you have life insurance, stuff like that, right? Property insurance. He's like, yeah. I said, what's the intrinsic value of those policies? You write a check every year for those policies, right? And yeah. And I said, and what's the value of those? And I said, the way I look at that is you are paying somebody else, basically, and for a policy that you hope is worthless. You don't want to die prematurely. You don't want to, get serious illness. You don't want to have your house broken into. And it's valuable to you to have something that will pay you if something really bad happens. And it cannot be, except if the company goes bad, it's yours. You own it, and it's going to solve your problem with that if that happens. Well, right now, we have something called gold, which could do that, but again, its supply isn't fixed. And but everything else out there is something that, if you live in Venezuela, or you live in Nigeria, you live in Lebanon, you live in Ukraine when the war broke out, all of that stuff, Afghanistan, when the U.S. pulled out. When the U.S. pulled out of Afghanistan, Western Union stopped sending remittances there or taking them from Afghanistan. But if you had Bitcoin, you were fine. Your Bitcoin is there. You can send it to anybody in the world if you have a phone. And so I consider Bitcoin basically, an insurance policy against financial catastrophe of one sort or another. And it doesn't have to be all or nothing. It doesn't have to be like there's some war in the United States or some kind of thing where the banks are all shut and stuff like that. It's just the case that if there's look what happened to the money supply when the pandemic hit. That's when the Fed stepped in that pandemic and started gunning the money supply and bailing out, in essence, the mortgage REITs and the other people that are doing commercial paper and stuff like that. Bitcoin functioned fine. There was no run on Bitcoin. It went down a lot initially, but the system functioned without Fed and without any interference, and everybody got their Bitcoin and the price adjusted. And then when the Bitcoiners and newer Bitcoiners realized, wait, we're going to have inflation down the road, Bitcoin went through the roof. So that I think is it's an insurance policy the way I look at it.
Bill Miller is not the one who considers Bitcoin an insurance policy. Investors like Greg Foss, the career high-yield bond trader turned Bitcoin bull, has gone on record as saying that every fixed income investor needs to consider Bitcoin as portfolio insurance. The reasoning will be familiar to longtime Bitcoin acolytes: central bank manipulation of open market pricing mechanisms, fiat currency, and debasement. But Foss's pedigree gives his words added ballast. An expert in pricing and trading corporate credit, he spent over 30 years in traditional financial markets before focusing himself as a laser-eyed Bitcoin strategist. In the words of Greg Foss, money has always been a technology for storing the value of presently expended time, energy, work for future consumption. In that light, I believe that Bitcoin offers my generation, as well as my children's generation, the best opportunity to escape the certainty of fiat currency debasing. The reasons are not only mathematical. Every fixed income investor needs to own Bitcoin to hedge against the inherent risks of the current credit environment. Many investors are still focused on the threats of inflation. I believe that credit concerns are likely to overwhelm inflation concerns in this next cycle, and that Bitcoin offers the best insurance against this impending risk, he said.
So when you think about the comments that Warren and Charlie made in the last few weeks in Omaha, these guys are, you've said to me before, right? They're bona fide geniuses. They're incredible investors. They're incredibly thoughtful. Is there some sort of bias or prejudice or blind spot that makes it particularly difficult for them to understand Bitcoin?
Yes. There's several. I think everybody's got blind spots in one way or another, and they're error prone. But certainly one of them is that they are old. And they're not used to new things. They're not the type of people who embrace new technologies and different ways of doing things. They look at the tried and true and tested, and they also don't want to take a lot of risk. Buffett has said many times, I've heard him say to me that, he's taken enough risk in the insurance business, and he didn't even realize how much risk he was taking until like 9/11. Like, if we got all this property casualty stuff out, I didn't think about that. So it's not just what your experience is, because we had no experience of somebody flying into buildings before. It's also your exposures. And so he had to rethink his sense of exposure there. As Mark Andreessen memorably said, the first time that Buffett dumped on, this is 2017, that Buffett dumped on Bitcoin, he said the record of old white men who don't understand technology, crapping on new technologies they don't understand is 100%. And so, which then set me, when I heard Mark say that, then that Silver Blaze story jumped out at me, because I said, aha, there's guard dogs here that aren't barking about Bitcoin. And they're called venture capitalists. And venture capitalists' job is to assess new technologies and to decide which ones might be worthwhile and which ones aren't. And there's a whole ecology of them out there. And there's not a single one of them that I ever heard dumping on the technology of Bitcoin. Now, they might not have invested in it early because they weren't sure about it, but they certainly didn't dump on it. And that's the case where, and now there's certainly not a prominent venture firm in the country, if not in the world, that doesn't have exposure to Bitcoin. And in fact, many of them, the biggest ones like Andreessen Horowitz, for example, all of them are doing their own dedicated crypto funds. So last year it was $27 billion went into crypto venture investments. That's more than all the history of Bitcoin combined did. They did that just in 1 year. This year, in the first quarter, 5 times as much money went into Bitcoin ventures as did it last year, which was the all-time record. So the money is pouring into this space, which again is a measure. It's a measure of what the demand is for these sorts of things. Goldman just did their first loan, I believe, backed by Bitcoin, and so I think that you're going to see. And Goldman wasn't. I've talked to Pete Brieger and I and some other people. Wences, talked to the folks at Goldman, the management team there. A couple of years ago, they had curiosity but no interest, and now they have a high degree of interest. And Fidelity's been all over the stuff from the beginning.
Bitcoin also acts as a hedge against inflation. Bitcoin is an effective hedge against inflation, thanks to limited supply and decentralization. These factors bring in scarcity, resilience, and power. When looking into the query, can Bitcoin prevent inflation? 2 major factors you need to consider are limited supply and decentralization. The supply of Bitcoin has been algorithmically capped to 21 million coins. By the end of 2021, 18.77 million Bitcoin had already come into circulation. In other words, 83% of the Bitcoin that could come into existence had been mined within 12 years of the inception of the cryptocurrency. The decentralized structure of Bitcoin takes it out of the control of a centralized authority. With thousands of nodes functioning across the globe, the network is optimally resistant to external attacks that might be seeking to alter its monetary policy, which might put the inherent scarcity of the digital coin in peril. When it comes to levels of decentralization, no other currency comes even close to Bitcoin. Thanks for watching today's video. Please let us know what you think about our videos and how we can improve to serve you better. Stay savvy till our next video.